Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Before we get into markets today, because it was a very interesting today, we want to talk a little bit about this YouTube channel. If you haven't yet, hit the subscribe button. It does great things for our channel, our little growing channel here. We have a kind of a whisper number of subscribers that we're looking to get to because we kind of have uh, a little competition going on with a little friendly competition going on with a competitor. Once we hit that milestone, we'll tell you what competitor that is. But until then, we want to keep growing our subscriber count and see if we can get uh, above our some of our larger competitors. We're a young channel here. We just started producing daily videos since the 22nd of April, so just a few weeks we've been doing it now. We've gotten a lot of great and positive feedback on it so far. But if you aren't yet subscribed, which I think, the data tells us about 70 or 73% or something like that of people who watch our videos are not subscribed. So if you'd like to get these kind of updates on the regular, make sure that you are subscribed to Ireland Como Lafoy or CanadianAgMarkets.com YouTube channel. All right, let's get into what the market did today. Very interesting day today, particularly in the veg oil space. Canola was down $26.20 on the front month today to $695.30. So now trading back below $700 a ton. Minneapolis wheat up 5.25 to $582.25. Kansas wheat up 5.25 as well to $528.25. Chicago wheat up 8 to $532.75. Soybeans down 26.5 cents at $10.51.25. Soybeans or corn up 3 at 448 and a half, although that's a little deceiving because that was the only one in the calendar that was up today. We'll talk a little bit about that later. Canadian dollar still steady around 71.5 cents. Live and feeder cattle took a little bit of a breather, extending some losses this week. Live cattle down 277 to 205.85. Feeder cattle down 615, now below $3 a pound at 295.82. All right, just kind of wanted to show a bit of a juxtaposition here. Today, we saw soybean oil go limit down, which is quite a change from just a couple of days ago. This was our YouTube thumbnail, everything oil is gold, when it seemed like oil, crude oil, vegetable oil, canola, everything related to oil was in favor. So just kind of wanted to point out a little bit of that difference and just how fast the market can swing or market sentiment can swing. All right, looking at soybean oil here a little bit closer today. As you can see, we saw a 3 cent per pound loss in soybean oil. That was the daily limit, 3 cents per pound. And that came across the calendar. Originally, we saw just the front month go down 3 cents, and the further out months on the calendar still had some liquidity or didn't see as big a losses. But by the end of the day, the entire calendar was lock limit down. Tomorrow, we will see expanded limits of 4.5 cents on soybean oil. So it is possible we will see an extension of these gains. And of course, it is possible that we will see even larger gains tomorrow because of the expanded limits. I don't necessarily think that's going to happen. I think that some of the shock today will wear off. I can't say for sure that that means a rebound, but I don't think we'll see losses as deep. So who knows? Maybe I'll be eating some crow tomorrow if that comes to pass. But one risk that we do have here is that we are coming into Friday ahead of a long weekend, and I'll explain why that's important here in a second. So here is the July soybean oil chart. We saw it back off quite considerably down to the 20-day moving average here, erasing significant amount of the gains that we've seen over the last 4 or 5 days. Somebody's name you may never have heard of, his name is Lee Zeldin, is reviewing the renewable volume obligations under, he's the head of the EPA over the upcoming months, which, shook this soy complex today. The delay, the cautious tone used by Zeldin, and rumors of less than expected adjustments to some of the blending models have created a bit of worry in the space, is a quote from an analyst today. And those Zeldin's comments came during testimony in front of a Senate committee today. So let's talk about why this is important coming into a long weekend. Here is soybean oil managed money net position. They are 57,700 or 57,800 contracts if you round it up. Long, is that that's not a record long position by any stretch of the imagination, but it is still a relatively sizable long position. It has grown recently since the end of March as well. So we could see a bit of a risk off, a bit of a profit take, what have you, in this marketplace. And we could see this market continue to slide as a result of long liquidation. Being long and wrong is not something you always want to be. And we could see continued liquidation as we move into a long weekend here. Here's the canola chart for today. July canola, again, down almost $25 a ton. As you can see, that did break below both the trend line and the 20-day moving average in canola today. Those are both relatively bearish signals. However, as you can see in this chart, it's rare that we see 2 consecutive days or 3 consecutive days of losses in the canola market. Is this going to be the exception, or is it not going to be the exception? We are not sure yet at this point. November still behaving a little bit better. We saw losses in the November today, but not as stark. We did not see any support breaks or anything like that, but still some severe losses across the calendar today in November canola. Just like soybean oil, canola managed money net position has been growing significantly in the last weeks. This is the last commitment of traders report that was reported. The number here is 80,245 contracts. That is near to a large long. I think that is somewhere around 84,000 contracts. I should have that memorized by now, but I don't. This number is relatively old. Okay, we're talking. This number was reported back Tuesday of last week, which would have been. So this week is the week of the 12th to the 6th. This would have been the net position on the 6th of May. Okay, so we're pretty far away from that date. Since that time, we saw a significant rally in canola. So there's a potential that this net position actually on this week was above 100,000 contracts. We saw the high of the day yesterday, or the high of this contract yesterday. The reporting for the next report ceased on Tuesday. I would not be surprised to see 100,000 contract print on Friday when that report comes out for the Tuesday. That would mean there's a very large managed money net position in canola, and that can scare, again, long and wrong can scare some investors into taking profits and or reducing risk and selling the market down. So there is those risks in this marketplace at this time. Also, just kind of wanted to show, I know I've been kind of updating this chart as we go through. This is the November futures canola seasonal chart. And as you can see, we normally see this market top, according to this chart, it normally tops on the 17th of May. This year, that would be a Saturday. Obviously, it's not going to do that. We're very close to that now. So if we have now, see if yesterday was the top of this market, this seasonal chart is very close to accurate then, and we could continue to see prices slide as well. We did issue guidance this week to a lot of our full consulting customers, and it was a very busy week here at Ireland Como Lafoy, taking action on some of those new crop positions and even getting rid of some old crop straggling tons that are sitting around out there. That's the story with canola. As far as the weekly continuation, and the reason I wanted to pull this up is sometimes it's worthwhile to kind of pull back and look at patterns here. So tomorrow, because of these losses, I would say there is a pretty good, there's a pretty good chance that canola will finish the week in a loss situation. Now, looking at this chart, you can see that once that happens, we generally see 2 to 3 weeks of follow through after the fact, right? So one negative week of canola here results in a couple of weeks, 3-4 weeks of some correction. So again, that would be in line with seasonals. That might be in line with some technicals. So I think we should be prepared. I think the question that always comes up is, well, is canola going to get back to the previous highs that we saw on Wednesday or whatever? And that's always a very difficult question to answer. And virtually impossible to answer. But just wanted to outline some of the risks. I think that you can never say never, but based on what we're seeing today, there's a lot more risks in this market than there is opportunities, just based on the action that we saw today. So just wanted you to be prepared for that. You can always sell and use different derivative contracts, things like that, to get back in if the market decides to turn around. So layering risk off the table is never a bad idea, particularly when you're doing so at a profit. All right, I want to talk a little bit about soybeans as well, because they corrected hard today as well. They moved back into the range that we'd been seeing through much of April, and also blew down below the 20-day moving average here. Soybeans again are somewhat out of favor as a result of this EPA news today, and we could see some technical follow through on that as well. Here's the corn chart. We've seen a couple of days of gains in the July corn chart. Saw some again today. But what's interesting is that here's the kind of the calendar of corn futures. July was the only one we saw gains in today. The rest of them were negative, not aggressively negative, but negative nonetheless. I found that a little bit interesting as we move, towards paying more attention to the new crop positions. Kansas wheat saw some gains today. There has been a winter wheat tour happening here, and they're finding, the weighted average of yield at this point is 53.3 bushels per acre, which is roughly that was today's or the most recently days reported. That was 26% better than day two of last year's tour, and the second highest day two yield average in the past decade. So overall, the conditions are looking good. So the question would be, well, why is Kansas wheat rallying off of this? And I think a lot of the weakness that we've seen in the last few weeks has been a result of the crop conditions coming in, improving, the rain situation improving, the soil moisture improving. So it was kind of a sell the rumor and maybe buy the fact kind of situation. And so, that's why this tour isn't necessarily hitting the market in a bearish way like the headlines would suggest. Minneapolis wheat, was up today, but it has been sinking quite considerably. One thing that has been positive for the wheat market here in Canada is the basis. So over the last, month or so, we've seen some significant gains in basis. I think this has a lot to do with, well, we've seen the Canadian dollar weaken off in the last couple of week or so. That helps a little bit, but also it's just been hard to get farmers to move wheat because of the price declines in the futures. And so in order to kind of pry the bin doors open, I think elevators and buyers have had to compete a little bit more on basis. Basis has been very attractive and is still making the cash price, particularly for the old crop tons, still attractive. So, a little bit of a bright spot in an otherwise falling spring wheat futures market. Also wanted to kind of point out a little bit of the spread between Kansas City and Minneapolis. Kansas City, or the premium that Minneapolis holds, over Kansas has been diminishing quite considerably since since the second week here, the start of the second week of May. It went from 75 cents down to about 50 cents now. So we've lost about 25 cents of premium between the Minneapolis and the Kansas. I think the improvement in the Kansas wheat crop conditions are creating a bit more comfort for wheat traders to understand that there's probably going to be plenty of protein wheat available in the marketplace. The USDA called for over 900 million bushels of carryout for the 2025-26 marketing year recently. So, there's no perceived shortage of hard wheat or good protein wheat in the marketplace at this time. All right, to finish off, we're going to talk a little bit about cattle. We've seen 2 consecutive days of big losses in cattle markets. So we could continue to see some follow through, some technical selling and things like that as well. Live cattle is now down to 205, as we mentioned earlier. And feeder cattle are now below the 20-day moving average as well. So we could continue to see some technical selling in these markets after a considerable bull market here in the cattle industry. All right, that is all we have for you today. Thank you for tuning in. We hope that you will subscribe to our channel, and we will see you again tomorrow.